Welcome to the Deep Dive. We're your shortcut to getting informed, fast. Today, we're jumping into oil and gas investments, specifically the kind of high upside opportunities that,
Yeah.
that catch your eye. We're using Bison Insights, that's a newsletter from Josh Young, as our guide, our mission. To pull out the key nuggets, the really important stuff about these market ideas and what they tell us about the industry itself. Okay, so let's unpack this. Bison Insights, they've had some interesting calls lately. Two specific ideas really stand out. First, a natural gas play. It's up about 8% since they published. Solid, right? Seems like a fundamentals-driven thing. But then there's this other one. They actually called it a 1,000% plus opportunity.
1,000%. Wow.
Yeah. And get this, it's already seen nearly a 6x return.
6 times. Okay.
But here's the twist. It came with this idea of 3 ways to win, but also, and they were very clear, the risk of a zero.
Right. And that's what's so fascinating here, that asymmetry you're highlighting. When you see 1,000% plus opportunity paired directly with risk of a zero, it's a huge signal.
A signal of what exactly? High volatility.
Well, yes. But more specifically, it signals an investment likely tied to very specific events. Catalysts, maybe binary ones. So for you listening, this isn't just about the market bouncing around. It's about evaluating if, say, a particular lawsuit or a regulatory decision or maybe an asset sale, if one of those specific things happens.
And if it does, boom.
Potentially, yeah. That's where the 3 ways to win probably comes in multiple shots on goal, you could say. Anyone might unlock that huge value, but that risk of a zero, it's stark. If none of those key things pan out, the investment could just disappear.
So it really forces you to ask, how do you weigh that kind of extreme outcome? It's definitely not your standard steady growth investment.
Absolutely not.
And speaking of layers, Bison Insights doesn't just give you the idea. They bring in experts, too, which adds a lot of context. They did an interview that dug right into the lawsuit connected to that 1,000% plus opportunity.
Okay, so they followed up on the catalyst itself.
Exactly. It wasn't just a mention. The interview apparently gave real context on the legal side. Maybe what kind of rights were involved or the potential damages, explaining how a win could be so valuable or a loss so damaging.
Understanding the mechanism behind the potential win or loss, that's crucial.
Totally. It helps you grasp the original investment thesis much better than just seeing the label.
And connecting this to the bigger picture, you mentioned another interview.
Yeah, the second one shifted gears a bit. It featured an industry insider, someone with a real ground-level view of how U.S. operators are thinking about new drilling, new development.
Okay, more macro. What was the takeaway there?
The big one, declining core inventory.
Yes. That's a major theme right now.
So what does that actually mean for someone trying to understand the energy sector?
Well, basically, it means the best, easiest to drill spots, especially in places like the Permian Shale. A lot of them have already been drilled. The sweet spots are getting harder to find.
So operators have to move to less attractive areas.
Right. They might push into what's called Tier 2 acreage, which is just, it's less productive, maybe more expensive to develop, or they need fancier, costlier tech to get the oil and gas out of the remaining core spots.
Which implies?
It implies potentially higher costs for drilling down the line, maybe slower overall production growth than we've seen in the past decade. It puts constant pressure on companies to innovate just to stand still, almost.
Okay, it's a really important piece of context for understanding the whole industry, not just one company.
Definitely. It signals potential shifts in where the money flows, what kind of returns you might expect from the sector overall.
So whether it's these really specific high-octane investment ideas or this broader expert analysis on industry challenges like declining inventory, it's getting both that helps you build that knowledge base quickly.
Yeah, right.
Right. Understand what's driving things.
Exactly. You get the micro and the macro.
So let's wrap this up. What does this all mean? We looked at Bison Insights and saw two main things today. First, those high upside investment examples, the 8% gain, but especially that near 6x return on the 1,000% plus opportunity with its specific catalysts and, importantly, that risk of a zero. And second, the critical industry insights from those expert interviews digging into the legal details behind a specific play and then zooming out to the challenge of declining core inventory in U.S. shale.
Right. And maybe here's something to think about. You've got these potentially explosive, catalyst-driven plays with that explicit risk of a zero. And at the same time, you have this background industry pressure from declining core inventory, which affects costs and long-term strategy. So considering both those things, what might that suggest about the future shape of energy investments? How does that change how you personally might think about balancing risk, innovation, and potential reward in this market as it keeps evolving?